ladies and gentlemen. Welcome again to Markets Today. We have this special episode of the credit policy as unveiled by the Reserve Bank of India just a few minutes ago. A very quick look at the Nifty, and congratulations to you all. We have a fresh record high, a digit change as well. The Nifty's crossed 21,000 points, given the robust, the strong and the excellent review of the world's fastest growing major economy by the central bank, Reserve Bank of India's Governor, Shri Shaktikanta Das. To navigate this policy, we are joined by two excellent individuals, both very well-known economists in their own right. Mr. Indranil Pan joins us from Yes Bank, where he's the chief economist, as also Mr. Sujan Hajra. He's the chief economist at Anand Rathi Wealth Management. A very warm welcome to both you gentlemen. The elegance of RBI Governor Shaktikanta Das's speech was matched by the excellent shepherding of the economy that the Reserve Bank has done over the last 2-3 years, and the returns are for all to see. Markets of all hues are at record highs. India is a toast in the global community. Indranil, coming to you first, what are the 2 or 3 points that you liked about the governor's speech? Of course, rates have been held steady and the momentum continues on the long side. Sir.
Well, I think the governor is very clear about the fact that the globe is volatile, and that's what he wants to guard against. Beyond the policy, which obviously has not changed, and the focus is clearly on inflation and how inflation can be brought down to 4%, which is the principal target of the Reserve Bank of India rather than growth. The set out in terms of the projections of the RBI doesn't show 4% before the Q2 of the next financial year. Which necessarily means that the RBI would need to be on guard. So that's one very important takeaway from the policy. I think the second thing is in terms of the overall sort of guidance towards the economy, that in these volatile atmosphere, it is also the job of the Reserve Bank of India to maintain financial stability and weed out any risks that can be seen within the financial sphere. And they have already taken one step while they have actually increased the risk, and that's what he continues to highlight. And I think that would be the second takeaway from the policy for me. Overall, I think the RBI remains cautious.
Sir. Right. Let's get Sujan into this discussion. Sir, there was this wonderful line that the Reserve Bank of India Governor, Mr. Shaktikanta Das, mentioned, that we do not wait for the house to catch fire. We act before that. Prudence is a cornerstone of the Reserve Bank of India. How do you see this in light of the recent actions that the Reserve Bank of India has taken on unsecured loans? And what is your overall reading of the policy given the growth statements that the governor has highlighted?
Sure. So I'll start with the second part first. I think for me, the policy was broadly in line. Two of the major things which stand out. One is the upward revision of GDP estimate from 6.5% to 7%. This is by far the highest estimate for the year. So this is something. This shows the kind of positivism which RBI has about the Indian growth process. The second thing, Governor very clearly said that the inflation number coming down for a few months or a few quarters does not mean that we have to act for that. In fact, he expressed caution about premature change in either policy stance or the rates. So basically, as Indranil also mentioned, by RBI's own calculation, the 4% inflation is not coming till the second quarter of next financial year. So any possibility of rate cut over the next 12 months looks extremely unlikely. And on the financial stability front, obviously RBI now, with the immediate task of fighting inflation not over, but obviously not so much of concern there, RBI will move towards financial focusing more towards financial stability, and this is in line with that. And as we know that the Basel IV has been rolled out in the start of 2023 with an implementation period of 5 years, and that focuses mainly on the standardizing the risk weights. So I think RBI will increasingly focus more, and RBI has been a proactive regulator, and in
Right,
that
sir.
sense, RBI will do ahead of the curve. Over to you.
Right. Indranil, getting you back into the discussion, let's discuss the rupee as well as the external sector highlights that the governor's speech has pointed out. He says that it's been a sea of sanity when it comes to the rupee compared with its emerging market peers, and the kind of global tsunamis, this is the phrase that he's used, that have hit the Indian financial system. It's remained robust despite those challenges. Your view on the rupee from now on, and of course, what are the pain points in the external sector when it comes to exports, and anything that you'd like to point out on the positive side in these two statements from the governor?
Okay, so taking the second question first, I think to a certain extent, there are risks in terms of while he mentions that the drag from the external sector is likely to be lower going forward, I think there remains a risk because we really don't know what is the extent to which the global slowdown happens, whether it's a soft landing or a hard landing, and at what point in time the tipping point actually comes. So all that it remains uncertain. The point that I'm trying to make is that on one side, he has upped the domestic GDP to 7%, which means that there would be a resilience to the non-oil, non-gold imports from coming down. While if the scenario of a relatively sharper global growth slowdown takes shape, then the exports are likely to be crumbling relatively faster than the non-oil, non-gold imports for India, which means that I'm expecting the drag therefore to be increasing rather than anything else. But as the governor also points out, we are in uncertain times and we'll have to keep everything in our armory to take care of the risks. On the rupee side, I think, yes, the rupee has been relatively stable, but we need to realize that it has been helped by the huge amount of forex reserves that we have at this point in time. And the RBI has been using this as an opportunity to prevent any sharp depreciations of the currency, and has also prudentially bought back whatever they have been losing in terms of FX flows whenever the currency was depreciating. So the point is that this stability is being helped by the Reserve Bank's action on both sides of the currency, and that's what will continue going forward. Going forward, I think the big incident that is likely to happen is the June 2024 inclusion in the global bond index, by which people would be expecting around 20 to 22 billion of
Yes.
FX resources to come in. And contextual to that, if we continue to expect that the RBI would play a spoil sport in terms of absorbing the additional flows, then we can expect a slight appreciation bias, not very significantly, but just a slight appreciation bias for the rupee going forward.
What a wonderful thought you've touched upon, Indranil. Let's get Sujan into the discussion. And I think the crux of the speech was the positivity across the macro and the HFI indicators that the governor mentioned when it comes to the economic performance. He talked about core industries recording healthy growth. He mentioned that GST inflows are buoyant. There is durable urban demand. There is fixed investments by listed companies quite healthy in the first quarter, especially in petrochemicals, steel, chemicals, and cement sector. All very positive. I'm sure you've heard the speech in greater detail than me. Sujan, to you. When you look at the macro picture of the Indian economy, are you enthusiastic about growth targets being exceeded in the next financial year? Because the RBI, as we know, is a very conservative institution when it comes to sticking out its neck on forecasts.
Yeah, so yes, definitely that's there. But having said that, so that's what I'm telling. This 7% kind of a growth for the full year is something which was surprising. But as you rightly said, RBI has greater access to information than what is publicly available. So, and RBI, the governor actually had talked about the quarter two GDP growth being higher than what is what the consensus was expecting, and he was he proved to be right about that. So in that sense, yes, this depicts a very positive picture about India. In fact, in macro terms, whichever area you look at, whether it's domestic demand, whether it's foreign demand, whether it's the banking system, whether it's the government finance, most parts of the Indian economy is doing pretty well. I think there are two areas of concern. One area of concern is the corporate capex is not picking up much, though that is getting counterbalanced by very strong public capex. The second thing is if you look at the state elections which happened in the recent past, there is a sense of increased populism among various political parties. And now we are in the election season for the general election. So if the fiscal prudence, if the focus of the government currently on the public capex uh, does get deviated, that can be risk for the growth going forward. Otherwise, in terms of most of the indicators, India is doing extremely well, and this is likely to continue. Over to you.
Wonderful. Indranil, Indranil, your view. I'd like to take your view on expanding bank credit. The governor mentions that 17.6 lakh crore so far has been lent by banks in the current financial year. This is, of course, much higher than the 14.5 lakhs crore that were disbursed in the same period last year. Your view on sectoral demand. Where do you think is this demand emanating from? And where are the painful points across the economy, if at any, that you can point out to us?
So I think if I want to link credit growth to the GDP growth as we had done historically, and when say about 10 to 15 years back, that doesn't exist anymore. In the sense that the larger corporates, the AAAs and the AAA plus, they probably don't need banking credit the way they used to in the previous cycle. So, but the figures that you just read out, the other thing is that I'm not sure whether the governor included the HDFC bank sort of merger. To that extent, these numbers for the current year need to be reduced a bit so as we do an apples to apples comparison. Having said that, the clear worrying factor is the huge amount of bulge that has happened in terms of personal loans, and more in the unsecured category, which is something that the Reserve Bank is taking cognizance of and is trying to address. In fact, if I go back to one of the recent sort of speeches by the governor, the clear point that he's making there is that he's worried about the concentration risk. The NBFCs do borrow from the banking sector directly, and the banks also subscribe to the money market instruments that the NBFCs float to gather liquidity and funds. And therefore, there is a significant amount of concentration risk that the banks run towards the NBFCs. So these are some of the factors that needs to be kept in mind even as we pat our backs in terms of this 16, 17, and 18% credit growth that we have. So I think the need for the R from an RBI's perspective, and that's also the reason why they would want to keep the liquidity tight, is to keep the short end up in terms of the rates, and therefore arrest some of the, if I may be permitted to say, sort of the flab that is building around the personal loan book, and to that extent address some of the credit risk. So I don't think the RBI would be worried about any reduction in the credit from flows from the banking sector from the current levels, so as to ensure stability to the 7% growth, or whatever is the growth numbers that finally we arrive at for the current financial year.
Okay, let's, gentlemen, now look ahead. We've seen a very, very smart and prudent action by the RBI when it comes to managing the economy so far. We are now probably the best global setup that one can hope for in terms of micro and macro management of GDP. I would like to take your opinion, and Indranil, coming to you first, about the next 6 months. Remember, we get into this period of political, how should I say, let's use the word time period where everything else apart from politics will have a lower stature as we head into the general elections. The budget is likely to be vote on account. So, over the next 6 months, how do you see the macro picture of the Indian economy, given that crude oil prices will now probably start ticking up from 6 month lows? Indranil, to you first.
Yeah, so very clearly, I don't know how to answer this question because, as we heard the governor, there are adequate risks on the horizon, and when they play out and how they play out remains absolutely difficult to ascertain. But India, to a certain extent, remains relatively resilient in an island of as an island in an ocean of uncertainty, so to say, and that's the positive thing that we can take forward as we get into the elections. The general hope. And this is out of the leaf that we take out from the recent state elections. The general hope is that there would be no anti incumbency, which generally also means that there would be a continuum in terms of the policy momentum that we can expect going forward, and which is likely to be positive for the Indian economy largely. To a certain extent, I think you pointed out how the elections is likely to be taken. I think the focus of the foreign investors, be it institutional investors or be it long-term investors in terms of the FDI, and given the government's positioning and thrust towards the manufacturing sector, more diverting away from the services sector, I think these are the positive plays that we will see in the economy going forward, and therefore elections. Taking a leaf again out of the state elections may not be a very, very significant event in terms of how we can look at macro positioning of India within the global scenario.
Right. Sujan, to you, your view on how the economy will be piloted 6 months from now, given the political exigencies that India will undergo.
So here is the problem. The sentiments are too positive. If you look at 2000 when we entered 2023, the sentiments are extremely negative. People are expecting a recession in US and other advanced countries. Inflation was very high. There were apprehensions of continued and very strong monetary tightening. But the way the 2023 panned out, particularly after the first quarter, January, February, March, was just the opposite of what was the initial diagnosis. Right now, there is too much of hope. The expectation is that there will be a perfect landing in US, that policy rate cuts will happen very soon. The inflation will continue to go down. Bond yields will continue to go down. I think, this elevated expectation, and even if you look at in the domestic context, on the basis of the results of the state elections, there is a general feeling the way stock market reacted that there will be continuity, there won't be any anti-incumbency, there will be continuity. It might turn out to be that way, but having said that, I think we are factoring in a blue sky scenario. So therefore, maybe not just for the next 6 months, maybe for the next 12 months, there are more, according to me, there are more downside risks to the consensus view, coming mostly from the global scenario, including the geopolitical uncertainties, including the US elections in 2024. So there is a possibility of, while we'll start 2024 with very heightened level, levels of expectations, there are some possibilities of downside surprise on the global front, and that will to some extent play out in India in terms of both economy and markets, financial markets also.
Right. And my final question to both you gentlemen, Indranil, coming to you first. The financial markets are on a tear. Nifty scaled 21,000 as we speak. Everybody in the market is extremely enthusiastic given the strong electoral sweep that the ruling central party has shown in the recent state elections. According to you, is the economy overheated? Are we in some sort of an incipient bubble? And what are the precautions investors should take given your experience tracking the macro balance sheet of India?
I think this may be a question better answered by Susan. But having said that, I think it's very difficult to call out bubbles. And the bubble can only be called out when the bubble bursts, and then everybody, the last person who gets into the market gets hurt the most. And that is the caution that we need to exhibit. So from that perspective, I would not say it's a bubble. I would rather say that we are relatively in a steady economic growth position, mostly from the perspective of government's expenditure and how government's expenditure had been pumping the infrastructure segment and the related sectors, which includes the steel, cement, etc., etc. The critical element that I continue to look at is the continued softness in the personal consumption expenditure. More critically, the relatively weaker growth trends that we see on the rural segment, and to that extent, I think there is a huge mass of population that is possibly still not critically performing in terms of participating in this economic growth momentum. And that's something that the government needs to try and address.
Correct.
In terms of a more equitable distribution of income, in terms of therefore a relatively more sustainable growth pattern for the Indian economy. And on the stock markets, I think Susan is definitely a better person than me to answer.
So, Mr. Hajra, the ball is in your court. Are we in the beginning stages of a bubble, or are you comfortable?
So I don't know. First of all, I don't think so. Just to give you numbers, if you look at in October 2021, Nifty was at 18,400. In December 2022, Nifty was at 18,800. So even if you have crossed 21%, if you look at on annualized basis the return for the last 2 years, which is significantly lower than the long-term return. So in that sense, purely if you look at in the price movement side, the market is not overheated. Also, the other thing which one has to understand, that since 2018, say if you look at from January 2018, the earnings growth for the large caps have been around 13% CAGR. For the mid cap, there has been earnings growth of 21%, and small caps, there has been earnings growth of 43%. So rally of the market is on the back of strong macro fundamentals, strong corporate fundamentals. And if you look at in terms of valuations, and without going into the projections for the future, if you look at on the last 12-month basis also, both Nifty mid cap and Nifty small cap, they are trading at their median. The large cap is also close to the median. And now you built in the future earnings expectation. I think markets are fairly valued. And from this level over the next 12 months, the kind of trend return for Nifty 50 of 11 to 13%, that's pretty much possible. And I would expect mid cap and small cap earnings to be stronger, and therefore these stocks to deliver better return. So it's actually optical illusion, since the market has gone up a lot since April 2023. One is sitting on a huge return, but in reality, if you compound it over the last 2 years, the returns are not as astronomical as you might think. So over to you.
Right. And Indranil, you were absolutely right in sort of batting that ball into Sujan's court, and he really hit it out of the park. So, ladies and gentlemen, despite the stellar growth numbers that the Indian economy has shown and the fantastic report card that the RBI Governor has presented in his credit policy speech, our both economist friends say we are par for the course and there is no incipient bubble building in what is probably an island of safety in a sea of disaster globally. That's it, ladies and gentlemen, our coverage on the credit policy. Thank you, Indranil, and thank you, Sujan, for such wonderful, excellent, precise and concise views on the RBI Governor's speech. Have a good day.
Thank you.
Thank you.
With that, ladies and gentlemen, we'll wrap it up on this special edition, leaving you with the Nifty 20,964. It was a very brief 1 or 2 second interval when the Nifty scaled 21,000 while the Governor was commenting on the stellar growth numbers that India's economy had put up in the quarter gone by, and his very strong expectations of where the economy could be headed. The Bank Nifty is 260 points higher, 47,100 almost, and the mood and tone, tenor and strength of the Indian bull market remains in place. Thank you for joining us. Stay glued to your top financial requirements on Business Today Television.
After Flair writing, a new stationery company's IPO is all set